so much for joining us. Today's session is Bridging Finance and Strategy from a Leadership Perspective, and I'm delighted to welcome Alex Sanford, who's leading the session today. Alex is a CFO and an executive advisor and has been for over 25 years. He's worked with some large names, PwC, Coca-Cola, and a lot of other companies. He's also a finance professor at the University of MacEwan in Canada, and he's supported and helped a lot of organizations across North America to align financial management with strategic growth. So he's very kindly offered to present to us today and share some insight. We do want it to be interactive, but I think the best way to manage that is if you have questions, pop them in the chat, and then once Alex has delivered his presentation, we'll kind of revisit those questions or insights that you want to share, and we'll get everybody talking. So with that, I'm going to pass over to you, Alex.
Thanks, Christina. Thanks for the introduction. Hello, everyone. It's a pleasure to be here. Start to share my screen here. Let's start here with the agenda for today. So we're going to cover today finance and accounting functions, how important it is, the value we deliver as a CFO within those functions or function. We're going to look at financial strategy, how important it is as a CFO to connect those two, the value that we can deliver beyond the financial and accounting functions. The growth options, how many we have and which one they are. The decision-making process, the step-by-step, which we have to look at carefully, how important it is to look at them one step-by-step, and then how the CFO also can help in the decision-making process. The strategy, design, and implementation. We're going to see that the most important about implementation, not about the design. The interesting facts about strategy, and then the key elements of strategy, and if you have time, the human aspect of strategy as well. So, if you look at the first one, finance and accounting functions, as a CFO, right? I like to start with the month-end process. And the reason is we must have reliable financial statements. Right? Number one, because the financial statements, they provide what happened in the past and is a base for you to plan the future. So at the end of the day, your month-end process, right, has to be reliable or leading to reliable financial statements. And then we have reporting compliance, financial systems and technology, internal audit, processing controls. You may say, Alex, the P2P or order to cash, the process, the key process that feeds into the accounting software or ERP, which if there is gap of efficiencies there, may mislead the financial states correct. So how important it is processing controls, especially when the companies grow, it's crucial, essential to be reliable as well. Or there is no gap of efficiencies there. We look cost management, we look at FP&A in the future. We have leadership and team management. Performance evaluation, monthly basis, quarterly, semi-annually, annually. We have the capital structure, so raising capital via debt or equity. We're going to look in details. Capital allocation, CapEx, crucial there. Tax management, treasury, ST, investor relations, and bank and legal relations. We probably have captured everything from the financial and accounting perspective. But then you ask yourself, okay, I'm a CFO. I look for all of them. But what else can we provide as a value to the organization? How can we be insightful to provide value to all the leaders in the CEO and with regards to the strategy plan or the growth plan of the organization, right? So you don't want to be in the silo like just looking for financial and accounting, but today, as a strategic CFO, we have to be part of the decision-making process. And then if we move forward with the next one, which is the pillars of the CFO, what I call, we have the finance and accounting by all means, by default, must be there. You have the leadership, partnership, and communication, because we're going to talk about resource and capabilities today, and resource capabilities involves people. So people is crucial for you to engage people, make sure that the organization, the people have and knows about the vision and the mission of the organization. Is everyone aligned? So in terms of can we engage and communicate with everyone to ensure that we are on the same page here. So the CFO must be part of that, the other leaders of the organization, the sales, the operations, the CEO, to reinforce the communication support of the team, not about the result itself. It's about rewarding recognition of the people, right? So the teams we have. And a strategy information decision-making process, right? How important it is. We're going to see today here, I think, I believe next slide here, how important it is the communication, the alignment, and bridging financing strategy and having the CFO on the decision-making process. Like at the end of the day, we're going to learn that it's going to come back to the CFO to present the results of the boardroom. So how crucial it is for the CFO to join the boardroom and be part of that decision. And technology. Technology must be there. Everyone's talking about AI today. Probably not going to have time today, maybe another call talking about AI, but technology has to be there. It's not just about AI, but any sort of a technology system applications that help the organization to grow. So on the next slide, it's nothing about AI here. It's a simple slide, some ideas that I put together, which makes sense in a sense that if you look at organization today to grow from a CFO, I look at three key elements or three major points or three different lenses, right? One is about capital, because most of the organization, we need capital to raise the organization, to grow the organization. The other one is performance evaluation, how to evaluate your business to see if you're going well. We all know that's ups and downs. You have to make adjustments. And the third angle is about risk mitigation. Regardless, what business you are in, we're going to face risks, how to potentially mitigate them. And of course, internally as well, process and controls. So if we start the first one, capital strategic decision. So some companies, as a matter of fact, I have a client in Florida right now that's doing quite well. There's no debt there, but it's the exception. So most of the companies, we need to raise capital, okay? So point number one, we decide to raise capital. Why do we need to raise capital, right? So point one, yes, we need to raise capital, but why? So we need to evolve. We need to become more competitive. We need to enforce, in a sense, that be more efficient, effective. Number two, when you raise capital, where are we going to invest the capital into? So we got to make sure that we're going to align with the organization long-term growth plan. We got to make sure that we're going to invest the capital on the expertise the company has to deliver the best value. Another 3 point is about the corporate finance perspective. When you raise capital and you discuss with the leaders to say, okay, we know what we agree that we're gonna raise capital. We know that we're gonna invest the capital into the expertise we have to deliver the best value. But once we have that in place, and we're gonna raise capital via debt or via equity, we're gonna calculate the WACC, the weighted average cost of the capital, to see the cost of the capital there. And then I'm going to look at the projections, sales, the cost, the expense, the CCA, the depreciation. You're going to take the tax back. You're going to add back the depreciation. You're going to have the free cash flow. And then I'm going to calculate the NPV. The positive, the higher, the better has to be. We have to calculate the IRR, internal rate of return, which has to be higher than the WACC. And we have to calculate the payback time. You may say, Alex, you have all the key elements within that calculation. Yes, but the three most important are NPV, IRR, and payback time. And of course, you have to look at WCC first. So once we have the green light to say, yes, we raise the capital, we know where we're going to invest the capital into, we got the green light from the corporate finance perspective, all good to go. Yes and no, because we got to look at resourcing capabilities. It's not just about capital. It's not just about our ideas. It's about, do we have the people? Do we have the technology? Do we have the physical assets? Do we have access to capital all the time? Resource capability is crucial for the company to lead, to be successful there. And the fifth point is, you're going to raise capital. We're going to raise $100 million to invest in a new project. What potential risks we're going to face from that perspective, right? So raising capital is crucial. It's, in a sense, helps the organization to be successful there, but they have key elements in order to validate before we proceed. And then we move into a second angle here, which the performance growth, or we call the evaluation, is. First one, we're going to look at the balance sheet, number one. We look at the shareholders' equity. Are we building a stronger asset to the organization, right? So you can look at some key ratios there. You move to the P&L, we're going to look at sales. Sales can look at the gross margin by line of the business. If you have different line of business, you look at the expenses, you look at the bottom line. And then you can have some nice dashboard KPIs. You can look at the cash conversion cycle, how to manage AP, AR, inventory. Again, depends what you do, what you offer, what you sell. You can have key ratios there, key scenario analysis reporting that evaluate your business performance. So from that perspective, you look at the results, as I said, balance sheet and so on, you can be able to look at, yes, we are doing quite well, maybe not, and ups and downs, you have to make adjustments every single month, right? So that's crucial to look at those results. But remember, the balance sheet, the P&L, the cash flow, it's about the results for actions, decisions that have been made in the past. So in order for you to be successful and to align with the strategic decision, you remember you raise the capital, you invest along the next few months, next year, you're going to be invest that capital to implement the strategy plan there. We're going to have the CapEx in place. And then technically speaking, it should be raising the sales, will become more efficient, which everything is going to reflect on the P&L back. And then again, you can look at your budget, your results, you can look at your forecast, and we're going to talk about forecasting a little bit more. But beyond the financial evaluation, you're probably going to look at and say, technology, do we need any investment, enhancement in technology, right? New versions of applications, patch or AI, how can we be successful, implement AI, which AI tool you're going to be able to be successful, training people how to use AI. It's not just about AI. People has to be successful using AI, implementing AI, and take the best out of the AI solutions we have, right? So technology is crucial. You move into the operations. What does the operation need? Again, depending the business you are in, what does the operation need to be successful? Is about technology, is about machines, equipments, is about the warehouse, about the fleet. What do you need from the operation perspective to support the sales side? And then you move to the sales side, you're going to look and say, yes, does the company need a new sales or adjust the sales strategy? Do we need a branding? Do we need a marketing strategy there? How can we be successful? Do we need training, right, for the people in sales? We can be the best CFO. We can have the best operations, but sales leads the growth of the organization. So we have, as an organization, as a leader to support, not just the CFO to say, yes, here's the results, but how can we support as an insightful person, the operations leader and the sales leader, along with the CEO and the strategy plan to be successful there, right? So you look from people training, investment in people, investing in technology, make any fiscal assets, any investment in the operations side, and also on the sales side to be successful. When you look at, for instance, if you look at sales, you talk about pricing, but then you have to go about costing, and then you may have to look at the suppliers, right? So that's from the internal perspective. If you go from external perspective that you have to look at also is suppliers. Do we have any concern about suppliers? Because supply is gonna supply you with whatever you sell, right? So you're gonna have cost there. It's offshore, near shore, is a local supply. Is there any concern with our supplies? Can we replace supplies? What the power of bargain with our suppliers? And then you have the competitors. How do we position ourselves against the competitors? When I talk about competitors, about how do we position ourselves? What can we do better than anybody else, right? So what can you do that nobody else can? That's about strategy there. And then if you move from this perspective about clients, so do you talk to your clients? What's the feedback? What the value you have, talking to your clients? That's crucial as well. For overall perspective, it's not just about the financial statements. It's a connection between the sales, the operations, the strategy, the CEO, and then also externally, we look at the suppliers, the competitors, and the clients as well. And then if we move to the risk management side, which involves processing controls as well, we're going to look at political risks. When I say political risks, legislation, regulation, we look at economic risks, we look at interest rates, inflation, access to banks, we look at the social culture, depending on what you sell, where do you sell, we look at the technology, we look at the legal, we look at the environment, any factors that can reflect positively or negatively to your business. And when you look at negatively, how do you overcome that? And then also you look at suppliers, you look at competitors, you look at clients, you look at new entrants, right? So depending on the business you are, every single year you have new competitors coming in, right? You look at substitutes, or companies that sell similar products to yours at a much lower cost. How are you going to navigate that? Where are you going to position yourself? You're going to position yourself as a high end or low end, right? So exactly, it's about looking at all the data, the variables you have within that environment, and say, how can we position ourselves here and be successful? So that with that slide, again, there's a lot embedded in that slide. We can do a workshop, 4 hours workshop there, but that's the key elements what I look at from that perspective. And then once we have that assess and analysis done, we move into the growth decision, like how we're going to grow the business, right? So if you go to the next slide, the growth options we have only 3, okay? You may say, Alex, maybe, yeah, but look from that perspective, we have should we focus on what to do exceptionally well, reinforce resource and capabilities, and able to deliver the best. Again, from the first one here, it's reinforcing the resource and capabilities, people, technology, financial assets, or fiscal assets, and access to capital. So it's about deliver the best you can to your clients. Is a focus on your expertise. Remember, do one thing and do it very well, right? So that's the first number one option to grow your business. To become expert and then deliver the best value to your clients from that perspective. The next one, you have the unsolved growth metrics, which means that you have, let's instance, I'm based in Texas here. So you have a product A that you sell in Texas. You're going to like to sell the product A to all the states, which is fine, but make sure that you still deliver the value to your clients, even though you go to different states or different regions. And then you got to say as well, oh, Alex, I'm going to add the product B and the product C into A to my portfolio to increase the portfolio and sell to different states, which is fine. But remember, you got to have all the products or services which are associated with your expertise, right? So at the end of the day, you got to deliver value to the clients. You got to make sure that you hold the knowledge, the expertise to the products or service that you deliver. You got to stay within that to ensure that at the end of the day, your client's going to be happy. So that's number 2 option there. If we move to the third one, is about companies, generally speaking, after many decades or years, they implement many strategies. And then at certain stage of the growth development, they're going to say, look, we're going to do M&A acquisition here. We're going to probably do a joint venture, a franchise and license or greenfield. It depends on the business you are in, the industry life cycle, and external, internal environment analysis, and so on. So many factors and forces play there in that environment, that decision-making process. For instance, when you do an M&A, it's not just about the legal aspect or the financial aspects, but when you do an M&A, especially if it's in different regions, a faraway region, you don't hold that expertise, especially it can be international acquisition. You have to look at the suppliers, the clients, the competitors there, because you want to buy in a company today. You want to make sure that company can grow the next 5-10 years, right? So it's about buying today, being successful, grow the business, likely could be selling in the future, but it's about not about today. You have to look at the future and all those factors and forces that can have positively or negatively impact to that business you have acquisition. So look from the perspective that we say, look, we raise the capital, we do the monthly performance valuation, we look at all those variables, we look at the risk mitigation as well, externally and internally, and they have the option to grow the business, kind of align what we're going to move here, proceed, and then we're going to look at into the decision-making process. As I said, we have the political, economic, social, culture, technology, environment, and legal, we call factors. They play a role there, important to see. Let's say now we have the oil prices going up, right? So what potential can affect or how can affect your business, and somehow can you mitigate potential risks to your business, right? So in the past, we have not too long ago, we had the tariffs. So tariffs has affected many business. What could be the actions taken at that time, right? So we have the suppliers, as I said, suppliers, clients, new entrants, substitutes and competitors. How you assess and analyze your suppliers or your competitors or your clients, right? What value are we delivering to your clients? So do you hear back about your clients back to stay with you, right? So in terms of a SWOT analysis, you look at the strength. Are we taking advantage of the strength? Do we know our weaknesses, right? So we have to know the weakness because we have to overcome the weakness, invest. Probably people, technologies are involved in that perspective as well. We have to take advantage of opportunities, so we have to be connected all the time with the outside environment to see it. And the threats, right? Cultural alignment, by keeping force all the time in a sense that, it's not just about technology, it's about people. Have people there, have people aligned with the vision, the mission of the organization, The leaders of the organization has to be all the time, have meetings, weekly meetings, monthly meetings, so annual meetings to make sure everyone is on the same page. We know which direction we lead in the organization. Keep going on decision-making process. We have resource and capabilities all the time, human, physical, financial assets, or financial access to financial resources, technology, and then resources about what you have, capabilities, what you can deliver. For instance, Amazon has a great capability to deliver to your doorstep in 24 hours. It's a great capability. I don't know if I can say so today, but Southwest has been a great case for being successful as a lower carrier. Okay, it takes time for companies to build up capabilities and be better than other organizations. But you got to invest. It's not about capital. You can be the best professional ever, but it's about the alignment. You can be the best finance professional. You got to be success in sales. You got to be success in operations to align those key elements there and make sure that the company builds up capabilities. And then we are able to be successful, competing differently or uniquely, right? So raising capital, again, via debt to equity. If you're going to be debt, we raise the capital, we're going to invest into that. We have the capex, we're going to invest, we're going to implement the strategy, we're going to pay back the loans to the banks, right? So if you're going to be equity, you're going to be standing there showing the results to the investors, right? So again, the CFO is a crucial to be an insightful person helping the organization with the information, insight to say, look, here should be the pros and cons, how we can proceed and why. The alignment between investment and strategy, because, again, we raise the capital, we're going to invest on something that we deliver value. Do not stay away from the value you have built, the expertise we call capabilities that you have built over the time. Scenario analysis and projections, like even though Alex, we have looked all the variables there, right? We've assessed, validated, and analyzed. But when you look at in terms of projections, you're going to say, let's look at 5 years P&L. How's it going to look like the P&L in 5 years from now? How is it going to look like the cash flow, right? In 3 or 5 years from now. You may say, Alex, why do I need cash flow 3 years from now? Because you may need to raise capital in 2 years. Right? You need to raise more capital. And if you need to raise, when you're going to need to raise, and how much it is. And then you got to negotiate with the banks now, not when you need the capital. And
Alex,
then you have the...
Just letting you know, we're at the 25-minute mark. I said I'd let you know.
Thanks. You got to speed up. So I love speaking, so let's speed up a little here. So we have the industrial market analysis and so on. Next step, vision, mission, right? You have to look at where you're going to be. The mission, the purpose to run the business, the core values is the base for the culture. Again, on the objective here, financial, strategic, every single strategy needs to have a plan to say what we're going to invest and the numbers associated with the strategy. The strategy can be successful growing the revenue. The strategy can be successful automation or cost optimization. Both are going to results back on the P&L. Any strategy and investment has to reflect financially speaking. And then we have a look at external, internal resource and capabilities. We place another analysis to make sense, to look at make sense what we invest into. And then we have the strategy, as I said, usually company has 2 or 3 strategy maximum, right? Sometimes growing revenue, expanding, sometimes being efficient, effective there. And function strategy, because everyone within the organization, HR, sales, finance, and operations, they are part of the strategy plan overall, right? So the implementation of the strategy is who, why, what, how, and when, right? There's steering committees, there's project leaders. We have the process in terms of development, milestones, follow-up, and then you have the evaluation, the growth, the financial results. Strategy is a lot about at the end, when you look at the scorecard, you say, are we achieving the results that we should be achieving, right? Surprisingly, companies lose a third or over a third of the strategy, when they try to implement the strategy, poor execution. 80% of the leaders feel their company is good at crafting, meaning designing. 44% says it's good implementation. Only 2% are confident that they will achieve the strategy goals. Very low. Means that you raise the capital, we have made a huge investment, and the results likely is not going to be there. Okay? So that's a limitation between capital, people, and time. Not everyone has time to be, because it's, people are going to be involved in that strategy plan, implementation. Just 10% of the organization achieve at least 2/3, very low. 36% of the organization achieve between 50 and 66 of the implementation strategy, right? 54% of the organization achieve between less than 50%, means it's very low. Okay, so the success for the company is not just about the strategy itself, it's about implementation. And again, if the CFO has made decision there, and I say decision mean being insightful person on the decision-making process, helping the other leaders, there can be a high chance to be successful there. So again, there's a key elements here for the strategy. We have a couple of minutes here. The success of the company strategy depends upon competing differently, like how can you position yourself uniquely? What's the impact of external force on strategic planning? It does have all the time external forces influence and making a reflection to your strategy. Your strategic decision based on your vision, long-term plan. Does your strategy, then you adjust your strategy to the dynamics of the market? I have an interesting case here that is going to stop here for a second. If you look at today, Google today, the CEO from Heineken is stepping down May 2026, well known to have great ideas, great strategy, but he's going to step down because there was a poor execution on his great ideas, okay? And also there was many external factors affecting the results from Heineken. And again, Heineken is a very successful, long history there. The CEO, very competent CEO there, but they're going to step down because all the great ideas he had is being, sad, but the execution was not successful there. So again, last minute here, you guys have heard about culture eats strategy for breakfast. How do you overcome that, right? I was reinforcing communication, leadership, training, and performance management with everyone involved. So leadership, technology, people must be there all the time, alignment to be success as a team, meeting daily if there is a need for, weekly, monthly, and so on. That's crucial for us to evaluate the performance and of course, overall, make sure that everyone is on the same page. I think we're done here with 35, Christine, if I'm right. So
no, that's perfect. You'd like off 30 minutes. There's a lot of information, but really great. Thanks, Alex. No, really interesting. We haven't actually got any questions in the chat. Feel free if anyone wants to kind of speak up. The idea is that Alex has kind of shared some of his insight, and then we'd love to hear from some of you about your own experiences. So I'm going to stop talking and hope that someone's got something really interesting to contribute.
Well, maybe I can start. I just wanted Alex to comment. And my experience is from, let's say, medium-sized companies. So the top floor would be, 400 or 500 million. In those, usually there is no owner of the strategy. I mean, at some point you devise a strategy, you run it, you agree to it as a C-level group, as a team, and then at some point down the road, might be 5 months into the roadmap, reality hits, and then you end up responding to outside events. So I'm wondering whether for those companies, Alex would agree that the CFO and the finance group should be the owners of strategy, because strategy should have, as you said, the vision, the objectives, and specific KPIs, mostly financial and other, but at least for the financial, which means capital allocation, margins, growth, definitely is a big part of the strategy and the roadmap. So I'm wondering if he would agree that for mid-sized companies, the CFO should be the owner of the company strategy.
Look, it's a great question that CFO today has the role of the CFO has been added there, right? Because CFOs sometimes look for HR, depending on the size of the organization, technology as well. CFO can be or should be a big player there. Okay, the other leaders, the sales, because the sales leaders leads the sales, set the sales the number because they have a better idea about as the operations as well. But I mean, a CFO can be a major player, should be a major player. I have been discussing in all the presentations that it's hard sometimes in some cultures, depending on the size of the organization, the culture of the organization, the CFO is not a player in that decision-making process, right? How can we step in, help the CEO in a very kind of wise approach to say to, on the boardroom to be insightful and say, look, the pros and cons, why we should proceed here, what should we be looking at, what potential scenario we should face here, how can we foreseen if we go into this direction A or direction B. So you can step in as a CFO and be a big insightful person, big player there, and helping not make the decision. Again, it's not about making the decision for the sales on behalf of the sales operations, but help the organization be successful and bring that data. In a sense that that's how we should proceed here. Again, I would say, big organizations sometimes they have the chief strategic officer or chief strategy officer. And then that person or the sales sometimes would be, strategy would fall under them. But I mean, it doesn't mean that the CFO cannot be there as well, participating and helping the CEO to lead the growth plan. But I mean, the key element here, it's not about silos, about everyone has to be in the boardroom discussing and look at the potential scenario we face. And most important is about implementation, right? So sometimes we discuss hours and days, sometimes about the new strategy plan, but it's about execution. Are we implementing and getting the results that we are looking for? Because at the end of the day, remember, the CFO is going to be there showing the results, right? To investors or paying back to the bank. So how can the CFO on his or her position be a player to say, yes, we raise the capital, we invest the capital, now we have to get results back. What are we missing here? I hope I have answered your question, but yeah, that's the how can we look, just to be precise here, if the CEO and the other leaders agrees with the CFO taking the ownership, by all means, right? So by all means, yeah, but I mean, we have to have, everyone is on the same table agrees with that, it's fine. As long as the CFO also have a control and a team to support the finance and accounting process, right? So if the CFO has a good team, supporting him on the finance and accounting side, by all means, I think the CFO could lead that process as well.
Thank you. Latonya made a couple of good points. I don't know whether you want to expand on those, Latonya.
Hello, everyone. So sorry I'm on the road today, so I wasn't able to be on the camera. I think it was a really great discussion, so thank you, Alex, for that. Just going back to the question that was asked about where ownership and accountability should reside. I work for several large multi-billion-dollar companies all over the world. And one of the key things we found that when strategy is lacking or we lack success in fully delivering it, most of the time it's because the operating leaders who need to help us determine the how to deliver the strategy weren't fully engaged. And so what we always do is work to tie the annual performance objectives, make them cross-functional, make them shared objectives across multiple functions to ensure whatever strategy we were going after, it was delivered. Now, finance did play a pivotal role. We always measured the success. We always made sure we were giving real-time insights on how we were progressing so that we weren't always looking in the rearview mirror. But I think it's important for our operating leaders to be on the hook to deliver our strategy, the how. Otherwise, I think our strategy becomes at risk from day one.
I agree 100%. Okay, the operations leader, they have to be participating, provide what do they need to be successful to deliver this or support the sales plan. Okay, so the sales leader has to step in as well to say, here how much you should be selling. If you have new products, new service, whatever the plan is, the sales strategy have to come up with the numbers in terms of strategy. How can we be successful growing the organization? And then that's kind of the connection between those three. I call the three major leaders there, but could be other leaders as well. The operation must participate and be accountable, not responsible, but accountable to say, here what we need from the operation perspective to support the organization to deliver the strategy plan. And on the sales side, especially sales, right? So the CFO will never come up with the sales number. When you calculate the WACC and say, look, NPV, AIR, payback time, let's play the projections here, right? How is going to be the outcomes here? Can we be successful here? So that conversation there has to be everyone, has to be on the same page, and each leader has to be delivering his or her commitment there.
Yeah, and that really drives the collaborative engagement, and I think helps to improve the overall success or to delivering that strategy.
In those cases, the CEO also has a decision to say in that if that happens, right? To say each leader has to deliver, right? The commitment there, the numbers, results, whatever, not result, but whatever each one needs, right?
That's right.
Great point.
Perfect.
Just a quick question over here, or there's somebody else?
No, go ahead. Go ahead, Jack.
Thank you. So thank you, Alex, for this wonderful presentation.
Thanks,
So I do, as the other guy is saying, I do have a lot of experience in medium and small size companies. So the CFO spot, the CFO chair is a really big chair in this kind of companies. And it's a really important job in the C level and in the board, obviously presenting the numbers, presenting the information to the board, the mundane, as you were saying. So one quick question. As a new CFO, for every, like, I don't know, maybe that kind of CFO that is like part-time or fractional CFO. CFO is so important that they need to understand the whole strategy of the company, and it's as important as knowing everything about the company, because the strategy is one thing and the operation is another thing, and those two kinds of need to be really integrated, and the CFO need to understand the whole company. So when the CFO is new CFO, or the CFO is like part-time or fractional CFO, how do you think this kind of CFO can deliver a strategy in this company that they don't understand it yet? And what do you think about that? Maybe 6 months, the first 6 months of that CFO entering a new company.
I'll go down to first 30 days, okay? Spend some good time with the other leaders, understand what their needs are, understand how can you be helpful to them, understand what the CEO is looking for. The CEO has to be the one looking the vision, the mission, the strategy plan there, what he's going to be leading the organization. Make sure that you validate if everyone is aligned on the same page, right? So again, it's meeting the other leaders and trying to understand what they're looking for, what efforts they're playing to make sure that everyone is aligned with the strategy of the organization, and be a helpful person to see how can the CFO help them to be successful. So if you look from those key elements there, and at the same time, you look at the company's position, cash position, or the financial position, generally speaking, to ensure that the company is able to be successful supporting the sales and the operation, right? So sometimes they have great ideas, great plans, but the company doesn't have the capital or the debt level is too high. So depending on, you have to look at the position of the organization, the cash position, and look at depending on the size of the organization. But talk to the leaders, okay? And then see what they're looking for. How can you be helpful to support them to be successful? And then with the CEO as well, is everyone on the same page? You have to read behind the lines there. What's the culture as well? Sometimes the culture doesn't help much, okay? You're going to be seeing challenges there within the management there. So how can it be helpful supporting the leaders to be successful? I think that's meeting one by one, right? So that'd be the key point there. So that's how I would approach the first 30 days, right? Financial position of the organization, the strategy plan, and meeting the CEO, meeting the other leaders, discuss with them how we can help them to be successful, and be transparent, be frank with them. Look, here's the position we face today, right? And what can we do, like as a team here to be successful? What we need to bring into the organization, right? I usually look at not just about capital, it's about resource and capabilities. It's a training, technology, investment, because it's not about the idea and the capital. What else do we need to be successful there, right? So, and then is, and then you look at what the operations could bring needs to bring to the table, what the sales needs to bring to the table, and what are we missing there. So the conversation evolves when you start to have meetings with them, and then evolves, and at least you know already what we're missing. So when you go to the table, to the boardroom or the C-suite, the meeting there, you're going to be able to provide the value because you already talked to them. You know what they're missing, what we are missing as an organization, right? It's not put people on the hot spots. It's about, look, from where we have assessed it here, ideally we should have A, B, and C, adding here resourcing capabilities, and look at the strategy, how can you connect the dots there? So wisely approach, looking all the information you need to be in advance to go to the meetings and provide value there. So that's how I would approach.
Perfect. Great answer, Alex. Thank you.
Amazing. I think we've covered a lot. Alex, you've done a really good job of sharing some really good information. I mean, we're kind of close to quarter of. Has anybody got anything else that they'd like to add? Any questions? Any stories they want to share? Or are we all good to bring the session to a close? Speak now or forever hold your peace. No? Brilliant. Well, I really want to say thank you, Alex, for preparing the presentation and for sharing such great insights. Really appreciate you taking the time to do that. So yeah, with that, I will bring the session to a close, and thank you everybody for joining and participating.
Thanks, everyone. Thanks, Christine. Take care.
Thank you. Have a great day.
Bye.